What's up, millennials? Today we're going to take a look at the valuation of a company called Freyr, and this is a battery company that's going to be acquired by the SPAC under the ticker symbol ALUS. But before we get into this, of course, keep in mind that I have not done extensive research about this company. I'm just going to take a look at the valuation of this company according to the SPAC and the company themselves. Also, don't trust me or verify me. I'm just documenting my journey here. I'm not a financial expert, so always check what I am doing. And third, if you're not in the Discord yet, make sure to go to nesami.com/discord, leave your name, leave your email address, and you're going to get access to it. So let's first give a very brief introduction of this company, Freyr. They claim to be a clean battery solutions company, and this company is based in Norway. Now, they also want to be world's cleanest and most effective battery company. So they want to make the cleanest batteries of the world. I think this is a very powerful and a very bold mission as well. But yeah, I definitely hope they're going to achieve that, of course. There is not a merger date just yet, but they do expect to close their merger in Q2 of this year. With regards to the pro forma valuation, we can see that they are going to start out, as almost all SPACs do, with a share price of $10 per share. And they also say that there are going to be 137.7 million shares outstanding after the merger. So if you take that $10 and multiply that by 137.7 million shares, you're going to arrive at a so-called pro forma market cap of almost $1.4 billion. But then you also have to take into account that they're going to have a certain amount of cash on their balance sheet, which is quite a lot in this case. It's going to be $849 million in cash on their balance sheet, and we're going to see that they're actually going to use that quite well, quite effectively. So if you take that market cap now and you subtract that amount of net cash, then you're going to arrive at a so-called enterprise value, which is basically what the company itself, what the company Freyr is actually worth. So if you do that, if you take that pro forma market cap of 1.4 billion, you subtract the amount of net cash, 849 million, then you're going to arrive at an enterprise value of 528 million. So that means that Freyr, based on a share price of $10 per share, would be worth $528 million. The thing, however, is if we go into TradingView, we can see that the current price per share pre-market is $12.60. So that is what we're going to put in our Excel sheet over here. So based on this new share price, of course, the market cap, the pro forma market cap, has also increased by a bit, by 26%, of course. And that is now going to give us a pro forma market cap of a little bit more than $1.7 billion. And again, if you then take off the amount of net cash on their balance sheet, you're going to arrive at an enterprise value of $886 million. So basically, based on a price per share of $12.60, the company Freyr is now worth $886 million. What we now would like to know is what their future market cap is to, in the end, determine a fair price per share. So the first thing that we now need to do is to determine their future enterprise value. We need to know what Freyr is going to be worth more or less in the future. And in this case, we're going to look at 2025. Now, the thing is, they don't really have any revenue just yet. As we can see in 2021, 2022, they're almost going to have zero revenue incoming. In 2023, they expected to have actually quite a bit of revenue already, 321 million, quite a big jump from 2022, but okay. And then they expect to scale up quite rapidly all the way up to 2028, where they expect to have $5.4 billion in revenue over time. Then if we look at their EBITDA, we can also see that that is of course going to be negative for 2021 and 2022. But in 2023, they already expect to have a positive EBITDA of $7 million. Now, as I said, we're going to look at 2025. So let's do exactly that. Well, in 2025, we can see that they expect, and of course, expect is a very important word over there, they expect to have a total revenue of $2.9 billion. And they also expect to have a positive EBITDA of $703 million. So this number, 703 million, is the number we are going to use for our enterprise valuation calculation. Because we're going to take this number of 703 million and we're going to apply a certain formula, a certain multiple to this number. Now, with regards to that multiple, what we're going to do is we are going to compare Freyr to other companies out there. And they did so in this investor presentation as well. Here we can see a comparison between, Freyr and some other companies out there, battery companies mostly. We can see that they look at the 2024 EV, so enterprise value to EBITDA ratio. We can see that, for example, QuantumScape has a multiple of 25x, Romeo 6.3x, and then Tesla 52x, very difficult to say, Workhorse 25x, etc., 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 etc. You can see that the average EV to EBITDA ratio or EV to EBITDA multiple is 16.5x for these companies out there. Romeo is below that, QuantumScape is above that. So what they do is they say, okay, these ranges seem maybe a little bit on the high end for our own company. We, of course, haven't really proven ourselves just yet. So what we are going to do is we are going to apply a lower range of EV to EBITDA multiples of 9x on the low end and 11x on the high end. So now let's actually go back to our Excel over here. And let's pull up our calculator. And we said, okay, we've now got two numbers, right? Or at least multiple numbers. We've got the EBITDA of 2025. They say, well, that is going to be $703 million in 2025. And now we've also got those multiples we've just been talking about, a low multiple of 9x, a high multiple of 11x. So let's play with these numbers. First of all, let's take a look at what kind of valuation we arrive at if we use a low multiple of 9x. So then you basically take the EBITDA of 2025 and you multiply it by 9. So that is going to give you a future enterprise valuation of $6.3 billion. If you do exactly the same thing for the high multiple, that is going to be 11. That is going to be $7.7 billion. These two numbers are also here in the investor presentation, right? But they do say something interesting over here, and I hadn't really thought about this before just yet, because in the beginning of this video, we said that they're going to have quite a bit of cash on their balance sheet, and they're going to need it very much because they're going to build a gigafactory for their batteries. And they say in the investor presentation over here, well, what we expect to have over the next coming years is not a net positive cash position of $850 million more or less, but a net negative cash position, so a net debt of a little bit more than $1 billion. So they're going to go through $1.8 billion more or less in cash to most likely build that gigafactory and probably also use for other expenses, of course. So that now means that we do not need to take this enterprise value and add the amount of cash that we have been taking a look at in the beginning of this video, but we need to subtract the amount of net cash, in this case negative cash, and then we're going to arrive at a fair equity value, a fair market cap in the future. So, okay, let's see. Then we can say, all right, we just said that on the low end, with the low multiple, we have a fair enterprise value of 6.3 billion, a high fair valuation of 7.7 billion. Again, these numbers are also here in the investor presentation. And they also say, well, we're going to have a net amount of cash of minus $1 billion, of course, because it's the net debt amount. So if you take that enterprise valuation and you subtract the amount of net cash, so basically the amount of debt, then you're going to arrive at these market caps. So for the low multiple, we calculated a $6.3 billion EV, so enterprise value. So that is now going to be in market cap of $5.3 billion in 2025. For the high multiple, we said, well, a fair enterprise value would be 7.7 billion. But again, if you subtract the amount of debt, you're going to arrive at a market cap of $6.7 billion. And then, well, the midpoint fair market cap in 2025 would be $6 billion, which is basically the average of this number, 5.3, and this number, 6.7. So these would be the fair market caps for 2025. That is already one important fact to know. Now, the thing is, we can take these numbers and discount it back to the present, because these numbers are for 2025. We, of course, want to know the numbers for 2021. How are we going to do that? Well, for that, we are going to simply apply a certain formula. For that formula, we need two things. First of all, we need a so-called discount rate. And we can already see that discount rate over here in the investor presentation is 20%, which is very normal for SPACs. Almost all the SPACs are using a discount rate of 20%. And we're also going to need an amount of years to discount it back towards, right? Because we've been taking a look at the EBITDA of 2025. We're now living in 2021. They're going to merge in Q2. So we could say, okay, from 2025 back to Q2 of 2021 is 3.75 years, right? So 3 years and 3/4 of a year. Okay, so we have those numbers. Let's pull up our calculator again. And we can say, all right, so we have on the low end a fair low market cap in 2025 of $5.307 billion. Okay. We're going to apply a formula to that. First of all, we're going to divide it by 1.2. The 2 here is standing for that discount rate of 20% we've just been talking about a minute ago. And we are going to do that to the power of 3.75 because we need to discount it back 3 years and 3/4 of a year, so 9 months, from 2025 back to 2021, Q2 of 2021. So if we do that, if we take that calculation, we're going to arrive at a fair current implied market cap of a little bit more than $2.6 billion, okay? $2.6 billion, which is also here in the Excel sheet and also here in the investor presentation, by the way, if you just want to check that. So let's see, it's over here, $2.6 billion, a little bit more, of course. And then if we do that exact same thing for the high multiple, we said, okay, for the high multiple, we said a fair market cap would be 6.713 billion. If we do exactly the same calculation, so we divide it by the amount of, or by the discount rather, which is 1.2. So the discount factor, the discount rate, sorry, is 20%. We need to divide it by 1.2. Again, we do that to the power of 3.75. And that is going to give us a fair implied right now market cap of 3.4 billion more or less, which is the number also in the Excel sheet and also the number over here in the investor presentation. Okay, we're getting closer. We're getting closer and closer. This might be a little bit overwhelming, but hopefully you still are with me. So we now said, okay, these are the fair market caps. For the low end, 2.6 billion. For the high end, almost 3.4 billion. So the midpoint market cap would be simply the average between these two numbers, which is 3 billion. We can now take these market caps and we can simply divide them by the amount of outstanding shares after the merger, which we said in the beginning of this video was 137.7 million shares. So if we do that, if we take these market caps, divide them by the amount of outstanding shares, we're going to arrive at these prices per share. So for the low end, that would mean $19.45. For the midpoint valuation, $22.03. And for the high valuation, $24.61. So basically, that means that a midpoint fair price per share for Freyr right now, after the merger actually, would be $22.03. Whew, I hope you're still with me and I hope that all made sense. So based on these calculations, Freyr would have a midpoint valuation of $22.03 per share after the merger, which would mean that the stock currently is actually undervalued. Now again, like I said in the beginning of this video, don't trust me, verify me. Check if the calculations are actually correct. See if what I'm doing is actually correct. And also take into account, we have been taking a look at assumptions, predicted revenue numbers, predicted EBITDA numbers. We've applied a certain EBITDA multiple as well. So if you want to change one of these numbers, the entire calculation is going to change as well. And your fair price per share is going to change as well. With that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye.